Hello, good evening all of you. In this lecture, we'll discuss briefly what are the important features of a good financial management, basic principles, age-old principles, but timeless principles. This we can use any point of time. There is no restriction on that. These are basic principles. So first one, not over investing in fixed assets. Yes, this is the biggest mistake done by majority of the entities. Having owning too many buildings, owning too much plant and machinery. That is a bad thing. That may not give better returns. So that is why the buzzword in the business present days is that asset light business model. It is a growing word. It's the most demanding word at present world. Asset light business models. Asset light business models. Very less assets. With very less fixed assets will be able to grow. Don't block too much of money in the fixed assets. Invest as less money as possible in the fixed assets. Then we can show better return on assets, better return on investments. If our fixed assets is less, we'll be able to show better return on investments and better return on assets. Have a look at all these companies which are running on asset light basis. So they don't have much fixed assets. All cab riders, Uber, Ola, so food delivery products, Zomato, Swiggy, hospitality sector, Oyo, Fab, and the retail sector, grocers, rent share, hunger box. All these companies are asset light models. They will have less fixed assets and they will use more of their network technology. With the help of the technology, they are growing, not because of land, building, plant, and machinery. With the help of the technology. Okay, so today the thing which drives the business growth is not your land, not your building, not your plant and machinery, data and network technology. These are the thing. It is not that overnight you'll get the data. Data is not something which can be acquired. It has to be developed over a period of time. So insights about the customer behavior has to be developed over a period of time. That is the first thing. Insight data, get the raw data, convert into insights about customers behavior, have network, use the technology to scale the business. So these are the things which drives the business, not traditional land and building, plant and machinery, etc. Don't invest too much of that. Today's fast growing business depends upon this technology, data and network. So therefore, first important point is that don't invest much amount in fixed assets. So read as much as possible about this type of companies which are very asset light. So they will use very less amount of fixed asset, and but still they are able to grow. Next, this is the first thing, don't invest or don't over invest in fixed assets. And the second thing is balance the cash inflows and outflows. So this is the most important point. Don't abuse yourself. Don't have too much reliance on the accrual basis system of producing financial statements. Most especially IFRS, International Financial Reporting Standards, produce fair value basis of accounting. No, don't rely on that. Always the cash is king, not the revenue based system. So we have to rely on the cash based system. In spite of IFRS, we should give more importance to the cash based system. Turnover is vanity, profit is sanity, cash is reality. Ultimately, cash is the king. Ultimately, always cash is the king. Sir, I got income, sir. Okay, good. Sir, I have reduced the profit, sir. Okay, well and good. Sir, I did so much of tax planning, sir. I avoided the taxes, sir. Okay, well and good. Sir, I got so much of profit, sir. 100 crores profit, sir. Give me 5 crores. No, sir. Sorry, I don't have cash. Where is the cash? Sir, I have income, sir. I reduced the expenses. I reduced the taxes. I am showing more profits. Where is the cash? Question mark. Question mark. All is there, but where is the cash? Where is the cash? Profit not equal to cash. Profit not equal to cash. Cash is the king. Profit not equal to cash. Cash is the king. Okay, so therefore, in spite of our accrual based systems, in spite of our Ind AS, IFRS, etc., give more importance to the cash flows. Purchase an entity. If you are an amalgamated company, or if you're an acquiring company, look for companies which are having positive cash flow. Look for companies which are having positive cash flow. The more the difference between net profit and the cash flow from operating activities, that's less reliable are the financial statements. Okay, always compare the difference between net profit as per profit and loss account and cash flow from operating activities in the cash flow statement. So the bigger the difference between these two, the less reliable the financial statements are. So therefore, give more importance to the cash, not the accrual basis systems. Try to match the inflows and outflows of cash. Don't always focus on the sales and profit. Am I getting cash? Am I able to cash? Whether I'm able to pay the expense on time. That comes to the next category. That is working capital. Most important day-to-day life. Don't go for bigger things called as merger acquisitions always. As a financial manager, you should be able to handle the day-to-day small things. Don't always say that, sir, I am a finance professional, I am a finance expert. I want only big things always. I want big things like mergers and acquisitions, etc. No, don't ask only for big things called as mergers and acquisitions. Yes, You should be thorough with the day-to-day activities, small activities of managing the working capital. Small activities of managing the working capital. So purchase the goods on credit, you'll get the accounts payable and inventory, sell the inventory, get the accounts receivable, and recover the accounts receivable, you'll get the cash. So it is how the working capital cycle flows. First purchase the goods on credit basis, you'll get the accounts payable and inventory, sell the inventory, you will get the debtors, recover the debtors, you will get the cash, and repay to the accounts receivable, and repay to the accounts payable, and again purchase it on credit basis. The cycle goes on, working capital cycle goes on. So CFOs always use working capital as a key indicator of the operating health of a business. Like how the blood is important, to the body, which is every part of the body depends upon the blood. So therefore, every department within a large organization depends upon the working capital. Are we collecting bills from our customers on a timely basis? Are we taking benefit of all discounts? Are we availing all discounts given by the creditors? So are we maintaining enough inventory, or unnecessarily we are keeping too much of inventory? So for that, we are using so many techniques called as just-in-time inventory or economic order quantity, all this kind of measures. So therefore, good working capital management indicates the operating health of an entity. Good working capital management indicates the operating health of an entity. So these are the advantages of having better working capital management. These are the advantages of having better working capital management. First, in the market, your goodwill will improve because you are satisfying all the stakeholders. Sir, how my goodwill will be improving? Sir, enough. Goodwill will be enhanced. Sir, I am paying my rent on timely basis. I am paying salaries to my staff on timely basis. I am paying to my vendors on timely basis. Okay, then everybody will be satisfied. I am paying taxes on time. Therefore, no investigations, etc. Right. So easily you can obtain the loan. Bank loan you can easily obtain by looking at your good cash flows. Yes, good working capital management. Bankers will be able to lend money, and regular supply of raw material. So long as you are promptly paying to your vendors or creditors, definitely there is no scarcity of the raw material. So vendors will be willing to pay. Well, vendors will be willing to supply the raw material on a timely basis because you are paying them on timely basis. Next, smooth business operations. In case of crisis like present crisis, health crisis, war crisis, etc. So you'll be able to better manage the business, and will be end of the day solvent. Will not be near to insolvent, will be solvent position. So these are the various advantages of maintaining good working capital management. Next, and the fourth thing is setting revenue targets to achieve the growth. This is very important. In economics, being a postgraduate in economics, I know in economics we used to say one word called as big push theory. That means only biggest organizations will serve. Only big organizations will be able to deliver better things. So even if small organizations are delivering better things, people will not believe it. People have started using that big is equal to better. Yes, long back people have changed the dictionary meaning word called as better. So for the common man today, big organization is equal to better organization. A big organization, definitely they will deliver better services. Yes, they have equated that. People have equated that. So therefore we have to grow. Our business size should be big. Then only the people will believe us. Two important things. First, customers may not believe small entities. First point. Second point, if you are a small, you cannot serve the customer also. Even if you are not have modified intention, even if you want to genuinely serve the customers also, being a small entity, you cannot do that. So to get the customers' confidence and to deliver more services, better services to the customers, definitely we have to be big. Definitely we have to be big. So don't confuse every movement is a growth. Every movement is not a growth. Every movement is not a growth. So we have to achieve the revenue targets we have to set the revenue targets to achieve the growth objects. This is where people will make the mistakes while doing the budgeting. Today my turnover is 10 crores. Tomorrow, next year I'll put 12 crores. That is not the way of growing the business. Put 100 crores after 5 years. Not next year, after 5 years put 100 crores. At present I am getting 10 customers. After 5 years I have to get 100 customers. At present I am getting 10 customers. After 5 years I have to get 100 customers. After 5 years I have to get 100 customers. As simple as that. That is why the growth. Sir, why should I get 100 customers, sir? Even if you are serving better, 10 customers better also. Tomorrow itself also will be 10 customers only, or hardly 11 or 12 customers. Unless until you are big, people will not believe it. So people have equated big organizations is equal to better organizations. Big organizations will deliver better services. Yes, that is there. People have started believing that. That is a wrong principle, but still people will believe that. Therefore, as there is a saying in English, when you are in Rome, be like a Roman. When we are living in a foolish world, we have to be foolish only. Otherwise, we can't survive. To convince this majority foolish people, we have to grow big. Even if not for our sake, for the sake of the majority foolish people, we have to grow big. Unless until we grow big, two major drawbacks. Okay, sorry, two major advantages of being big. First point, customers' confidence will increase. So customer believe that only big organizations will deliver better things. And the second point, our ability to deliver better things also will improve. So if I don't have sufficient staff, if I don't have sufficient technology, if I don't have sufficient cash, definitely I may not be able to give a better products. I may not be able to give a better things. As simple as that. So just take my example. I am alone. I am delivering this lecture. So I don't have sufficient staff. I don't have sufficient technology or capital, etc. Therefore, my lecture is very simple. The same lecture, if I deliver with so much of multimedia and graphics, the attractiveness will be more. The attractiveness, people automatically equate that. Rather than looking at the content, people automatically give more importance to the graphics, multimedia, etc. So therefore, if our scale is good, then only we'll be able to deliver the better things. Then only the customers will have confidence on us. So therefore, set ambitious sales target. Set ambitious sales target, not small sales target. So remember, only the big people will survive. In today's competitive world, down the line, next 5 years or 10 years also, only big people will be able to serve. Therefore, set the ambitious growth target of sales. Don't go for 10 crores to 11 crores or 12 crores, to go for 10 crores to 100 crores. 10 crores to 100 crores. May not be in the next year, after 5 years. Put 5 years target. So current year, I got 10 customers. After 5 years, I should get 100 customers. Go like that. Go like that. 5 years, put the 5 years target. But don't target 11 or 12 customers. No, you cannot survive. You cannot survive in this competitive world if you are small. You have to be very big only. Okay. Next. So this is a crazy thing done by most of the startups by giving too much of discounts. No, may not be correct. You have to fix the price to get the profit. You have to fix the price to get the profits. Chase the profits, not market share. Chase the profits, not market share. The mistake done by most of the startups. So they will unnecessarily give on a discount basis so that they will get more customer, more customer and more market share. No, it's of no use. Recently, one of my laptop got some trouble. So I went to the laptop shop owner and I'm bargaining with that. I said that, sir, I'll keep on coming to your shop. Therefore, please reduce the price. He said, sir, even if you come 10 times also, I can't do the business on a loss making. This is my price. Sir, even if you come 10 times also, or even if you bring 10 customers also, it is a loss making business for me. I can't do it. I don't want you to repeatedly come to my company to make more losses. So even if you are coming 10 times also, I may not get the profits. I may get the losses. Therefore, I can't give it reduced prices. Yes. And non-MBA people and uneducated people are very more wiser than intelligent people or educated people. So they will use all this called as predatory pricing, market penetration, all this nonsense and stuff, and they will give too much of discounts. No, profit. Chase the profits, chase the cash, not the market share. Chase the profits, chase the cash. Okay. So you can attract the customers in various ways by giving better services, trust, transparency. So first of all, they should trust our product. First of all, we should be transparent in our promisings. We should be transparent in our services, etc. So trust, transparency, etc. Better service, timely service. With these things, we can improve the confidence of the customers, not with the discounted products. Try to get more customers with better services, not with lower price. That is always dangerous. So therefore, fix the price to get the profits. Most of the startups are doing this thing. Unnecessarily, they are burning the cash. They are burning the cash, huge losses, huge discounts. No, it will not work out. It will not work out it will not work out in the long run if you give too much of cash discounts, etc. Okay. Next, expenses, controlling expenses, very important. So this is where the automation will come and outsourcing will come. Two important things. To cut the expenditure. So to cut the expenditure, first people will use technology. People will automate the things. And second thing is people will give outsource and non-core activities. Non-core activities people will give outsource. The unfortunate thing is that some of the companies are giving accounting and financing function as a outsourcing because they believe that it is a non-core activity. Why it is a non-core activity? If the finance people are not giving a valuable insights or rich insights to the entities, then obviously they will not perceive ours as a core activity or revenue generating activity. No. So therefore, this is a risk for us. Technology outsourcing, automation and outsourcing, these are the biggest risk for the finance professionals. Okay, right. So you have to control the expenses. So if you are an organization, from the organization point of view, so you can control the expenses by using technology and making the things automation, using more automation levels, and also by outsourcing non-core activities. Automation and outsourcing, two important things to control the expenses: automation and outsourcing. Next, last but not the least, we are living in a country like India where the tax rates are almost 30%. Therefore, definitely we have to have a proper tax planning. Tax amount is not a small thing. So tax amount is almost 30%. Therefore, we should be very careful about the tax planning. So I'll give one financial ratio, popular financial ratio, so which is mostly used by almost all financial analysts. But the Warren Buffett strongly opposes that ratio. Even personally, I also oppose that ratio. So that ratio is called most popularly used financial ratio, which wise people will avoid. That is the ratio name is called EBITDA. This measure EBITDA, earnings before interest, tax, depreciation, and amortization. Earnings before interest, tax, depreciation, and amortization. This is a foolish measure. This is a foolish measure. So almost all many companies, they will use this measure. Many financial analysts to present better performance, they will use this measure. So they will think that, sir, if net profit is negative, net profit is negative, net profit is negative, and EBITDA is positive. EBITDA is positive. So they will say that, sir, current year we got the net profit, sir, because of some expenses. If interest expense is not there, if our debt is not there, if our tax expense is not there, if our depreciation is not there, we would have got positive profits. Boss, there is no situation of you can avoid those things. Today those three are there. That's why you are getting net losses. Tomorrow also those three will be there. Tomorrow also you'll get the losses. We have to get the profit, positive profit in spite of those three. You can't say that, sir, if these three is not there, I will get better profits. Forever you will have those three. Interest, tax, depreciation, three important expenses, three biggest expenses. Forever they will be there. Forever they will be there. Therefore, if you're saying that, sir, today I got net losses, sir, because of these three expenses. If these three expenses are not there, sir, I would have got positive. EBITDA is positive, sir. So today also these three is there. Tomorrow also these three is there. After 3 years also these three is there. Where there is no time when you can avoid these three things. That means never ever you will get the profits. That's what you are going to say. That's what you are going to say. So this is the most dangerous method. Most dangerous method. Okay, EBITDA. Never believe on this EBITDA. Interest, before tax, before depreciation. Three major expenses has been removed. Three major expenses has been removed. Then I will be positive. No. If there are four chapters in your syllabus, out of that 3 chapters are very difficult. If you ask me, sir, if these 3 chapters are not there, I would have passed, sir. Always those 3 chapters will be there. That means you'll never pass. You'll never pass the exam. That is how it is. That is how it is. Sir, this time from these 3 chapters questions came in the exam, sir. That's why I failed, sir. If the questions from these 3 chapters are not there, I would have passed, sir. Always the questions will be there. That means you will never pass. Pure common sense. Pure common sense. Therefore, my suggestion is also the same thing. My suggestion is also the same thing. So Warren Buffett also strongly opposes this method, EBITDA. So never use this method never rely on this method. If you are a seller, use this method for a marketing purpose. But if you are a buyer, don't buy any company, don't buy any share based on this. Don't buy any company, don't buy any share based on this good measure called as EBITDA. Okay. So therefore, no, tax is inevitable, depreciation is inevitable, interest is inevitable. Don't say that if these 3 is not there, I will get the profits. Those 3 will be there forever. Those 3 will be there. Therefore, you should show positive profits in spite of those 3. You should show positive figures in spite of those 3, not in the absence of 3. Sir, if problems are not there, I would have succeeded, sir. No, you have to succeed in spite of the problems, not in the absence of problems. Then only you are skillful. Sir, if this problem is not there, I would have succeeded. Problems are always there. You have to show the performance in spite of the problems, not in the absence of problems. Okay. Therefore, don't rely on this method. So these are forever. Don't forget these 7 principles. Important features of good financial management. Forever, don't forget this method. Okay. Thank you. Thank you all of you.